What is good, guys? It's Rey-Jay back with another video. And this one, I want to break down what's going on with Tesla, SPY, the QQQ, Nvda, and many tickers out there. I just want to talk about the much larger formations that have been developing over the last few weeks and the last few days, and talk about why we're seeing lots of these confluence between the different tickers and what they may be telling us about the market for the next couple of weeks. But before I break anything down with all this information, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed 5 free stocks plus a $50 cash reward. The offer ends in just 5 days, so check it out before they run out. With that out of the way, let's get on with the video. All right, so looking at SPY, we have a very interesting looking setup on the current 30 minutes time frame. And one of the things I mentioned yesterday was that on the 30 minutes time frame, we have this like head and shoulders like pattern. Is this going to play out? It depends on if we reject off 442 or not. If we break out of this, we're going to be watching this 444 to 446 area, and we could still, reject off of this and still be a little bit more bearish if that's the case. But if we keep breaking out of this because of Aapl or something like that, then we could still see the market try to pump. But it really depends on the test and etc. But what I wanted to talk about was how we have this head and shoulders right here, right on the smaller time frames. Well, when you zoom out like this and you actually look at the chart, you will notice that this is actually forming, and this is like the same as SPX, of course, being dictated by SPX, a somewhat slanted head and shoulders like pattern on SPY. It's a little bit big over the last couple of weeks. We had this like left shoulder here, a possible right shoulder forming. It's a little bit slanted, so I wouldn't be surprised if we do see it, looking this way. And then what we could do is, technically, you could technically take an extended line here and kind of like draw this out kind of like this and see if this is giving us any useful information. Could this be what this is bound to do, or are we about to see the market do something a little bit different? For now, we have this line that could be drawn out from right here, and then we could just take this and then draw another one just above, just to see if this, whoopsies, just to see if this will play out. But the bottom line is, with this slanted head and shoulders like pattern, I believe it's very important for us to just be open-minded and just be open to the possibility of this potentially playing out. Could we get one more pump, and could this still be valid despite that? It is a real possibility. But if we eventually get that rejection, the market could start sinking. So we're going to be watching these levels. We're going to be watching this head and shoulders. It's going to be very key for us. Now, in the smaller time frame, with this head and shoulders developing on SPY, what's very interesting is we have the same thing almost exactly on the QQQ, the same thing on the NASDAQ, same thing on Tesla that's also developing. I just wanted to talk about that and talk about what this all means. And then I'm going to start talking about like Aapl and Nvda in just a few minutes. But remember, on the QQQ, we have this head and shoulders on the 30 minutes time frame. If we get a rejection of 365 to 366, then we could see this rejection and the market's sinking. If not, even if we do try to go a little bit higher, we still have another head and shoulders like pattern that's developing on the bigger time frame on the QQQ. So even if it remains around like 370 or so, we could still reject off this trend line and still continue to drop. There is a possibility, so we're going to be watching that test. And finally, what I mentioned was Tesla from my video from yesterday. On Tesla, we have this head and shoulders as well. Will Tesla validate this, or will Tesla invalidate it? It depends on the test around this 240 to 242 area. If we reject and fail to break 244, then we could see a big rejection on Tesla. If it breaks above 244, then it could invalidate this and start pushing higher. But the problem with Tesla would be if this head and shoulders plays out and starts sinking, you want to watch this 230 support as the key level. If that breaks, do not forget about this imbalance at 221. And if that breaks, the support breaks there, we have this unfilled gap down to 215 that could get filled. So this is not looking the best for Tesla if this rejection comes. And then with the gap that happens to be down there, I just want to mention that Nvda has a very similar looking gap below. Nvidia stock has been on this nice downtrend over the last couple of days. After getting this nice pump from its earnings, it's just continued to sink. And it's been stair-stepping its way down. Now, it's currently at support, and 450 is going to be a very important support because NVIDIA has this gap right here on the daily chart. It's a little hard to see on the 30 minutes time frame. So if I go to the daily chart, you could quite clearly see this. Look at this gap, just like how Tesla has a gap down to 215. This has a gap down here at 433. If NVIDIA breaks below 450, right, and it ends up sinking down to like 446 or so. It could fill this gap down here and start sinking. But there's a possibility it might try to like bounce on Monday before that happens. And we're going to be watching to see if Nvidia could hold 450. If there's some kind of bad news and the head and shoulders all play out for like SPY, the QQQ, Tesla, Nvidia may follow with the rest. Now, what about Aapl? And Aapl is a stock that's kind of like mixed up. We're going to be watching that very carefully if these end up playing out or not. On Aapl, it's very mixed right now because, there's this possible, you could argue there's like a cup and handle that's trying to form on it. But Aapl simultaneously has shown some weakness because it has been just closing below that 180 support. So you want to watch the 30 minutes time frame on Aapl, and you will notice that there is a possible slanted head and shoulders on it that could lead to some downside. Now, when you zoom out a little bit more, you will also notice that if this is like an accumulation, if this is like a cup and handle, if Aapl were to start breaking out and filling some of these imbalances, you're going to be watching it test 180. If 180 breaks, 183 is going to be tested. If that breaks, I could see this thing going all the way up to 186 if it breaks. It really depends on the test or not. And if Aapl gets a breakout, this could actually help the market break out and instead of just like forming those head and shoulders. So Apple's kind of mixed right now. But if Aapl is hit with some bad news and this ends up playing out, this could also be a flag that's forming on it. Like it came down hard. It's just like in this small channel, and it's going to see another big next leg down. If we reject around that like 180 area, that's going to be a very key test for Aapl that I'm going to be watching for. So Apple's like kind of in the middle, but Nvidia not looking as great. Tesla's looking a little bit more bearish with the formation. QQQ and SPY are all following the same trend. So that's why it's very important to look at them in that manner. But now the question that comes, okay, is the market going to crash or is it just a pullback? And I know a lot of people are asking me that question. I want to answer the question for you right here. So when we zoom out, right, you want to look at the 1 month chart or the monthly charts on SPY. And here's something that's very important. Okay, zooming out of the chart, we have this giant formation that's been forming for the past, I would say, what is this, like almost 2 years now? Yeah, it's been almost like 2 years. It's been a very, very long time. I would say like a year and like 7 months or so. But here's the thing, okay? We've been pumping like crazy in a very, very nice inverse head and shoulders recovery. This is forming a cup and handle. This is forming a cup and handle like formation. Okay, that's what it looks like on the monthly chart. And just to be frank with you, okay, there's a possibility that this could end up playing out if on the monthly chart, this thing continues, it's been sinking like this, and it just continues to fall. It could fall to lower levels. It could fall all the way down to 420 if 431.5 to 430 ends up breaking. But it could still be on a much larger uptrend for the later months as time goes on because of how this is currently looking. It could still continue to push up going into next year like this. I think this is actually the monthly chart, so I drew this out a little too far. But we could still see something like this, right? It could still form this cup and handle and try to continue to go and break out over the next few months and eventually break all-time highs. That is still a real possibility. So make sure that you are prepared for that, just to be honest. So my point is the market's pulling back. Sure. Historically, the market is supposed to pull back after getting, what is this, 1, 2, 3, 4, 5 straight months of green. It's due for a pullback. That's normal. We could pull back more in September because that's what historically happens. The market tends to pull back in September too. So August and September could be bearish months for the markets. This could affect Tesla and all these different tickers. But as we approach October, the market could start like finding its bottom. And the market has a tendency of pumping 80% of the time in November. And we tend to pump in December as well. So we could end off on a very, very strong note with a very strong uptrend. And we could still retest these highs. We could still retest these much higher levels. If you think I'm crazy for saying that, remember, SPY was at 460 just a few weeks ago. Okay, the market is crazy. The market can move no matter how much you argue that fundamentals don't align with this. It is what it is, and we have to just play what the trend is suggesting. And the trend is suggesting that there could be a giant cup and handle forming on SPY. The handle could still be forming, so we could drop a little bit lower to where our golden pocket happens to be around like the 422 area. So we could drop a little lower, right? We could still see more downside for September. We could still see this on SPX and etc. with the head and shoulders like patterns forming, but on the much bigger time frames, even if the market comes down to these levels, there isn't truly a catalyst to cause the market to break the October lows as of right now. My analysis could change if there's some bad news, but so far we're not seeing that insanely bad news to crash the markets. So far we're not seeing it, as crazy as that sounds. And this is looking like a cup and handle. So yes, we could drop a little bit more, but ultimately, towards the end of this year, this chart suggests the market may get some major upside to close the year. Going into the second half of October, approaching November and December, the market may pump very hard again. You may say I'm crazy, I know, but remember, out of the last 6 months, what has the market done? We pumped for 5 of them, and we're just barely coming down for August, which is an overdue pullback. It's a very vacuous market. The market could do crazy things that you don't expect. And as of right now, I do believe that this is very possible, this cup and handle forming. And I just want to be open-minded just to be safe. So be open-minded. Keep this in the back of your mind that the market will most likely end in a strong note. And for now, yes, we're slowing down. We could continue to slow down for September, but historically, the trends don't lie. Don't forget that we have an election year coming up for 2024. Will they truly let the market crash towards the end of the year? Or are they going to let the market pump to give us a strong end to the year because it's going to benefit you know who, right? You understand what I'm saying? That's what happens in the markets. It's an election year. The market is looking, a little weak for the time being, but towards the end of the year, everything can still change. The bottom line is I do not see a crash. I'm not seeing the market crashing. I'm seeing a healthy pullback for now. That's what I'm seeing for now. A very healthy pullback, and the odds do favor a nice recovery. My opinion could change if there's some new catalyst. My opinion could still change. But as of right now, we're not getting that, and I'm leaning more in this direction. All right, so I hope that's as clear as possible. Thank you all so much for listening. Have an absolutely spectacular weekend. And I will talk more about these tickers for tomorrow specifically. By tomorrow, I'm sorry, I mean like for Monday specifically, a little bit later. So enjoy the weekend. Do what you have to do, guys, and I'll see you guys in the next one. The market to the moon as the long term is still incredibly bright, and peace out.